Thanks everyone for joining us tonight. Tonight, Alex and I are going to be talking about, the Bank of Canada decision that was announced yesterday.
Or lack of indecision to do anything. That's what it kind of feels like. My name is Alex Winiecki from Remax Condos Plus. Just a little bit bio about me. QR code there in the middle if you want to, if anybody wants to scan and connect on social media. I'm a realtor in downtown Toronto. Carmelo, why don't you talk about yourself?
Yeah, my name is Carmelo Batiste. I'm a mortgage agent at yourmortgageyourway.ca. I've been doing mortgages for over 20 plus years, so I've seen a lot of economic cycles. And now I'm independent. Being independent, I have access to multiple lenders, and I'm here to find solutions that cater to you and everyone here that's looking to do any financing.
Yeah, and I mean, I guess like the way that we're going to go about this is we're going to have a bit of a, of an overview of what the Bank of Canada's decision was, and then there was also some, some changes that were announced today by the federal government, and there's other changes that we anticipate as well. So we'll have a brief presentation, but then we're going to just open it up for more of a discussion. Hopefully by that time we'll have more people in the call.
Yeah, and everyone who's here, again, we'll definitely have an open discussion. We'd love to hear some feedback from you and what your thoughts are with regards to what the Bank of Canada announced and also today's recent announcement.
Yeah, so why don't you take it away, Carmelo? So what did they announce? Oh, no change. Wow.
First thing, surprise, the Bank of Canada.
I'm not surprised.
there was no change, but we kind of knew going in they wouldn't be making any changes to the prime rates. This is kind of like we could see over the past 3 years how the Bank of Canada, the rates, we're still stagnant for all 2022 until all of a sudden they started going up.
So during COVID, was it 0 or was it like 0.25? Like it's hard to or what is that line? Because it seems like it's above 0 a little bit.
Yeah, it was above 0. I believe it was 0.25.
Okay.
Not believe. I'm confident it was 0.25.
So when the rate was 0.25, what were the mortgage rates that a consumer was getting?
It depends whether you're getting variable or fixed. There was a point where there was a variable rate of like 0.99 for 5 years.
Wow.
Which was crazy. But again, all in all, you're getting rates of well under 2%.
Yeah. And I mean, I remember this market quite vividly, right? So like 2022, it was pretty aggressive. We especially January, February, March. I think March, April was when we peaked. And then they started to, increase the rates a little bit. And in the beginning, people weren't really getting too worried. But then as the rates went up and up, we started to feel it, especially in certain property types in the GTA.
Yes. Now, when it comes to anyone who wants to know how interest rates work, the Bank of Canada, when they make an announcement, it impacts those who are in a variable rate mortgage. So if those who are in a variable rate mortgage, if the prime rate goes up, your interest rate goes up, and vice versa. When the Bank of Canada lowers their prime rate, it's called the overnight lending rate, your interest rate will go down.
And this is a big misconception, because I think a lot of people don't understand that the Bank of Canada rate actually is not for fixed rate mortgages, for variable rate mortgages.
Yeah, it's only for variable rate mortgages. Fixed rate mortgages are based on the 5-year bond yield, and this looks completely different.
This looks a little more like an up and down as opposed to that other one was just up.
Yeah, the other one has been it was smooth for the last 8-9 months, but this does not show the same thing. If those are looking to get a fixed rate mortgage, how the banks price the interest rate they gave you on a fixed rate mortgage is based on the 5-year Canadian bond yield. There's a premium. They add a percentage or so to that. They add a premium to it. And you can see with fixed rate mortgages, we hit a peak in kind of like October. And since then, up until the beginning of the year, it went down rather quick. We thought, okay, inflation hit a peak. The expectation of rates coming down is going to be fast and furious. And it just went really quick in 2 months.
So is this like when somebody goes to their bank and I know like bonds, that's like an investment vehicle that you can buy. So if somebody buys bonds at their bank, is this what they're buying?
Canadian savings bonds, even when you think of it, even 5-year GICs is another way to kind of use as a metric, right? GIC rates are high when you give money for an investment. The rates today versus 6 months ago, you won't get the same interest rate on a GIC.
And this is guaranteed, right? Like when somebody invests in bonds, it's guaranteed income.
It's backed by the Canadian government, which is backed by the population. So yeah, I would say a Canadian savings bond is 100% guaranteed.
Okay, so
we don't default on our loans.
Right, but so I guess, and I don't know if you were, but like it seems like bonds are up a little bit, right? Like especially the last couple of days.
Well, yeah, it's just really, again, at the beginning of the year, those, how people get mortgages at the end of December, early January, really good rates.
Hmm.
Those who are pre-qualifying or those that are buying since then are talking to their friends that got mortgages a few months ago. And
Mhm.
unfortunately, interest rates are just higher.
Yeah.
I cannot get the same rate that I was able to get back in early January.
I know that we were talking about like some people were getting rates that were like 4.9, 4.95. Is that what that's what you're talking about, the good rates, right? That were
In January, is slightly lower than that. We're in the, we're close to the mid fours, but 4.69, 4.89 was available,
right. And
right?
what do you think it's now? Like what's the
Well,
best we can hope for?
it's not so much. It's not focused on today. Let's focus on like where interest rates are going. Because
Okay.
again, the one thing for that was the big surprise with yesterday's announcement is after the announcement, the bond yield just spiked up, which was
Yeah.
like the Bank of Canada didn't change rates, but all of a sudden I'm walking, I'm turning on my computer this morning, and all of a sudden I get one or two notifications that some banks increased their interest rate.
And I see here you have it says United States inflation. So well, how is this related? Like how is the US related to us?
So I kind of was trying to find out yesterday, like why are bond yields going up? And yesterday, again, it's kind of weird how it impacts us. But yesterday, United States, they also made an announcement with regards to their inflation. And yesterday, inflation went up. So in the short term, inflation in the United States is going up. So we're kind of have two different economies. And the United States, they're our biggest trade partner. So when they're having bigger inflation, the expectation with what may happen in Canada may trickle over.
It's kind of like that saying that we used to have that when the US sneezes, Canada catches a cold.
And that holds true a lot of times. Now, the good thing is with history, we don't always follow the US.
Okay.
Right? With yesterday's announcement, now it's the question as Alex, what do we expect going forward?
Okay, but I mean, okay, so when the inflation goes up in the US, that basically means that there's people are spending money, prices are going up, the higher interest rates are not preventing people from spending. Spending's continuing. Is that what that means?
In the United States, correct.
So the economy continues to move.
Yes.
Yeah. And in Canada?
In Canada, again, this is where what's going to happen moving forward. Well, Canada, we have a different picture.
Our inflation looks a lot different.
Over the past year, we've had 2 months in a row with inflation now under 3%. Right? Our inflation, again, we've had similar ups and downs, but however, ours is kind of more on the lower side, and the trend is going down. Like the factors and the different parts of inflation, how it's being calculated, it's more broad that in more areas it's going down, which is a good thing.
Do you think our high cost of housing and also us having to renew our mortgages every 5 years and not having like a fixed like 30-year mortgage like in the US is because it's based on this? If I'm looking at the chart, what this tells me is Canadian economy is weaker, people are spending less money.
Yes.
Do you think this is, and I know the proportionate to the US, I mean, like now Toronto is more expensive than Miami and New York City. They announced like as per some, news headlines. So do you think that unaffordability of housing is why people are spending less money, or economy is not growing as quickly? I mean, these numbers are still like that's a 3 at the lowest point. So we're still like in the mid twos for inflation?
No, this is it's kind of the chart doesn't really show like the exact amount. It gives a little bit more visual, but it's again where I think last time I saw the last inflation was 2.8.
So our inflation is 2.8.
Yeah, because remember, like the one whole line is like 0.3 difference, so it's like 2.8.
Okay.
So again, you're right, Alex. Again, with the people renewing their mortgage at higher interest rates, which those who are landlords and seeing their mortgage come up for renewal and they're charging their tenants more, the housing and shelter costs is still keeping inflation high. And when you look at it compared to last year, yeah, it's still higher than last year. So
Yeah.
it's still, it is a big component with regards to why inflation is probably higher than what it should be. But the federal government or Tim McGafflin, I forgot his last name now. He sees what's happening, and he actually said one comment when the reporter asked him, like, "Do we see the possibility of inflation going down in June?" And he said that's possible, which was
Said that's possible.
yeah. I actually saw the video of him saying that it is possible.
That inflation will go down in June.
No, the Bank of Canada can lower the prime rate.
Oh, can lower the prime rate in June.
Yes,
I mean, that's what we're all kind of been waiting for.
that's what we're all waiting for. Now, again, what are they seeing? They're seeing inflation coming down. They also see unemployment in Canada going up. Right, we had unemployment at all-time lows over a year ago, and now unemployment's going up. Businesses are slowing. There's more layoffs out there. You hear, a lot of big companies laying off workers. So the economy is clearly slowing down. Now, again, you mentioned there's a possibility of the prime rate coming down in June. It doesn't mean it may happen. He needs to see more data. You have April, May, data that will come out. And if it continues in the same trend, we'll see what happens, right? Whether it be June, whether it be July, really is going to depend on the data. But the data is clearly showing that the economy is slowing, inflation's coming down, which is what they want to see. At the same time, with unemployment going up, that means less people are working, there's less people not making money to spend.
But at the same time, our population is growing as well, and so when people are coming here, they maybe don't have employment right away. Do you think that that's playing a factor on unemployment?
I don't know about that because I don't know how immigration works, but I think those who want to come here, Alex, I think they come here with employment.
It depends. It depends on how they get here. But yeah, I mean that's one factor. But like this is an article that came out today. I wanted to add it to the slide kind of last minute. So the CIBC they basically polled Canadians that are non-homeowners, and it's evident that it's a challenge, a major challenge for people to get into home ownership, especially those that are not property owners yet. Like the challenges that people are facing are being able to carry that mortgage, and also coming up with the down payment. And I know that today there was some announcements that were made by the federal government, but they only apply to pre-construction.
Yeah, so we didn't have a chance to have a slide, but this afternoon, our finance minister came out with regards to those looking to purchase a new construction property starting April 1st. One, you're allowed to increase the amount you're able to withdraw from your RSPs from 35,000 to 60,000, which is a good thing, right? Because new construction, they obviously cost a lot more money. And the second thing is, though, you could also get a mortgage with a 30-year amortization.
This is for a project that's closing after April 1st, or a project that they're buying after April 1st? And April 1st was like 10 days ago.
No, sorry, not August 1st. August 1st. You're right, Alex. It's August. I said April.
Yeah.
Again, the announcement was literally just a few hours ago.
Yeah.
I think when the federal budget comes out next week on April 15th or 16th, there'll be a lot more details to it.
Yeah. And also we heard that they're going to potentially be looking at new measures to qualify borrowers, loans.
Rumor is that they're going to be increasing the amortization for first-time buyers to 30 years from 25 years for those putting less than 25% down payment. But that rumor might have been intertwined with regards to what the announcement today.
So basically, lots of rumors floating around. Not many changes as far as the prime rate. If anything, mortgage rates are increasing slightly because of the bond yields and the U.S. economy, performing significantly stronger than anticipated, and we're just waiting until the next announcement. Like, when is the next announcement due?
The next announcement of the Bank of Canada is on June 5th.
Okay.
So the good news is our economy is slowing down, and even though the U.S. is not, our finance minister, our governor is realizes what's happening, and he sees that there's, it's in sight. Rates coming down, whether it's June, whether it's July. I'm sure by September we'll have a lot of confidence and we know exactly what's happened.